This is Morning Stock Watch with a weekly market report for the week ending April 31st, 2020. This report includes the broad market sectors, large movers for this week to include INO, Tesla, and Boeing. Starting with the S&P 500 ETF, SPY. Weekly closing price, $282.79, just 0.06% below last week's close. Looking at the weekly chart of the SPY, this past week ended as a red shooting star with a long upper wick that sold off from the 50 weekly moving average. This week turned out as expected with volatility and some new recent highs. Our last report, we saw how the price action resembled an ascending wedge pattern that points to the $300 area, as we can see here. Also on the weekly chart, we observed that price continued to move towards 300. We are at the same time building negative divergence on volume, as we can see here, as well as showing signs of weakness in a few of the recent weekly candles, where a few of the candle body sizes do not have matching volume, as we can see here. Also on the weekly chart, we watched a long breakdown candle on the week of February 24th. Its closing price is around 296. We then said 296 to 300 would be a good area for price to start turning around. This week then ended as a red shooting star at the top of a bullish trend with decent volume. Because of that, the trend definitely looks to be a bit weak and looks likely to make lower prices from here. And on the daily chart, to build more of a bearish case, notice the difference in volume on the last 4 trading days. Thursday's candle looked very suspicious, followed Wednesday's candle with the smaller body and higher volume. That could explain Friday's sell-off, among other things. Looking at the 11 market sector ETFs, simply looking at the weekly candles in comparison with the S&P, we remember SPY closes a red shooting star on the week on slightly higher than average volume. As we can see, most of these charts also have shooting stars and/or spinning tops at the top of a bullish trend, with negative divergence between price and volume. This is bearish. With the exception of tech and healthcare, the charts now all appear to have a tough time with the moving averages, as well as being near a clean whole number. Most of the charts continue to show a bit of weakness with negative divergence between price and volume. We believe this could be a good candidate for a top. Now let's look a bit closer and see where the S&P could actually be going. As always, there's 2 sides to every trade. The idea is to be on the good side of the trade more times than not, with each trade having limited risk. With that said, let's see where this thing can go. The last couple weeks, we said there was a lot of evidence that price could start setting up for downside, and this week we finally got a good indicator of that. We have a nice breakdown candle here from last week. The close of that is around 265. I don't really see it going through 260 this time around. This doesn't mean it absolutely must go down. It just looks most probable at this point. Next is Tesla. Weekly close 701.32. A couple weeks ago, we were watching for further upside from Tesla as long as the market was bullish. Previously, we drew out this particular wedge pattern with these 2 lines here. It points right to the clean number of 850. This week, we see price make swift moves up to 855 on the day with after-hour highs of 887. This, for the most part, hits the targets exactly and then proceeds with the violent sell-off. For the next move, the first thing that stands out is a long flat Kumo cloud, as well as the many moving averages in the area. That's a strong area around 650. And there's a breakup candle at 650. Also, volume and price has some bullish divergence building up, along with the weakness between the volume spreads. We may even see as low as 580 next week. Next is INO. Weekly close 1028. This is a biotech company working on about 6 different vaccines for the COVID-19 virus. Price was up about 80% last week before a strong sell-off, bringing price back down to closing the week right on the trend support. For right now, we can tell they didn't want the price to move much lower than where it is now. This time around, I don't see much lower than 850 if we would have more downside. And then we have Boeing again. Weekly close 133.37, up about 4% from last week's close. On the weekly chart, the first thing I see is the inverted hammer at the bottom of this trend, with the very high volume for the size of the spread. This will be a valid bullish signal on the weekly chart for at least another attempt to get above 165. We'll need the next few candles to validate that move. The hourly chart things also look more bullish than bearish. Let's add a trend line to see why. We see that price broke above the trend and then had a series of retests. This many times ends up being a bullish move, but at the worst case, we could see the trend line tested again, which would bring it down to somewhere around 105 and 108 before another attempt to break through higher. Upside targets continue to remain at 165, 185, and 225. If these targets are met, then another study will be needed to determine the next price move. If you found this report useful in any way, please give a like and subscribe. Thanks for watching, and see you next week for another weekly report.